Yeah.
How does a company like, I think Trey mentioned that that app had 27 million in revenue. How does a company like that, how does the value of the company inflate so much to the point?
That's a great question. I wish I had an answer for you. I don't know that anyone could answer that question other than it was worth that much to Facebook. I mean, clearly, you know, Facebook views the world differently. My world is constrained by numbers. Like, you know, I have to be rational within, you know, some kind of valuations. And typically our valuations are, and this is $2,000, is multiples of EBITDA. That isn't applied to a company like that company, where Facebook was looking at it. And I think what Facebook was thinking is, we're not that cool anymore with the younger generation. They were losing that demographic. I don't know, do people here do you guys still use Facebook? So that's exactly what they were aware of. The older generation was using a lot, but the younger, and they also, younger people and a lot of people were getting very concerned about privacy invasion, and Facebook was getting a lot of hits for that. Where this app company, super high privacy, 450 million users worldwide in the younger demographic that they were targeting. So somehow they justified that value. Wait, back row.
How much money do you guys invest in the companies, and does it vary on the type of leaders that are in the company?
The average investment for us is, well, let's say it ranges from, I'd say $5 to $25 million. And it correlates to the type of leader, but the size of the investment really is dictated by the size of the company and the value of the company. More importantly, the value of the company is dictated by the quality of the leadership, its historical performance, and what we think the company will do in the future, you know, post-partnership. Yeah. From retail, restaurant, and apparel, because they're very cyclical, they're very sort of fashion oriented, they're very tough industries. We tend to gravitate to industries that have lower investment to grow, that aren't as cyclical. We do software, we like service companies, business service companies, niche manufacturing. I don't know, do you guys ever go up to Long Beach and you know that dome that the Spruce Goose is under? It's a big white dome. We actually purchased the company that built that dome, and 18,000 domes like it around the world, and have since sold it. But that was a cool company called Temcor. So does that answer your question?
Yes.
Let's see. Yeah.
Do investors find it beneficial to invest in internet companies like Facebook or like Instagram or stuff, or is that considered that it doesn't have a true face value?
What candy would you like? Pretzels? M&Ms? Okay. Oh, sorry about that. That was a good toss. The answer is yes. For example, there is a venture firm that invested in that app company. They invested $60 million, and I think they got $3.5 billion. So that's a very good return on investment if anyone can do the quick math. But again, most internet investments are done by venture type investors that are early stage, betting on ideas, betting on strategies, and it can be huge returners. In fact, if you want to look at the difference between, if we had more time, I'd share a great story for you, because one of my great friends and advisory board members is a venture investor, and they just view the world very differently. Like for us, if we invest in 10 companies, if even one is a loser, we're pissed, okay? You know, like for us, the perfect scenario is maybe we got a couple that break even, a couple that do well, a few that do well, then a couple that do really well, right? That would be a good portfolio for us. A venture investor, on the other hand, if they might have out of 10 investments, 5 that are write-offs, where they've invested, they get nothing back, maybe 2 that are break-evens, and 3 that are huge home runs. So again, you know, one of the reasons I love what I do is because, and I pick leverage buyouts, is because I'm more conservative by nature, so it fits with my risk tolerance. I'm not a venture time investor. I'm not a swing for the fence and hope I hit a grand slam and be happy if I strike out 5 times. Yeah.
What is a typical day in your work life like?
That's a great question. What candy would you like? Snickers? All right. Typical day in my work life can vary a lot. I'd say I spend a lot of my day communicating. Okay, so I'd say I spend a lot of my day talking with people, either the phone or in meetings. I actually have, I'm going to say, at least 3 or 4 breakfasts and 3 or 4 lunch meetings a week. So I spend a lot of time meeting over meals. I don't like having business dinners, and I don't like business travel. I like being home with my family. So, that's just a personal choice. And then so the rest of my time is spent doing some analytics and trying to figure out structures for transactions. We're working on a battery transaction right now that's so interesting. Battery companies, it's a scary investment because the landscape of battery companies is just littered with flameouts, with just disasters, and then there's a few winners. There's one company that we've been talking to for a while that is, we think, in the right place and in the verge of winning a huge contract from the military. And so we're trying to figure out how to structure it so that it gets them the capital they need, but also is appropriate risk for us. So there were a couple other questions. We have a few more minutes. Yeah.
Does companies' value change seasonally?
Pardon me?
Does companies' value change seasonally? Or
Does the value change seasonally? That's a good question. What candy would you like? None? Well, anybody want her candy? Connell is the first one. What do you want, Connell?
I'll take Skittles.
Skittles. All right. So, seasonally, no. Not necessarily. Companies' value changes by typically they earn more or they grow more. So software, at the end of the day, most companies are valued by cash flow, okay? But then some companies, like software companies, are valued by revenue. And then some companies, like internet companies, are valued by some other black magic that's important to someone. So the seasonal impact isn't as much, except for some companies may have like, let's say you're selling Christmas ornaments. Your biggest quarter is probably going to be Q3, the third quarter of the year, because that's when you're shipping so that all the stores can get ready to sell your stuff in Q4. So that'll be a seasonal type business. Any other? You've asked a bunch, so let's say you haven't asked any.
Yeah, you said your marketing was kind of weak, so how do you find the connections that
Fair enough. I said that's like I think my weakest business skill. It's just not where my personality lends. So what I do, I recognize it and accept it. Like, I know I'm not a great marketer, and I know some great marketers, so I know what they're like. What do I do? And so I try to improve myself beyond recognizing that that's something I have to do, and then B, that I find people that can supplement that are really great marketers. I just met yesterday with our last investment and a marketing team that we're thinking about hiring, and these guys were incredible. I mean, the ideas that they came up with and the strategies, we just would not have thought of. So, we all have strengths and weaknesses, and so I guess I'm going to close this, since the bell's going to ring in a minute, or less than a minute. What I would say is, look at yourself, figure out what you love, what you're great at, and let that dictate what direction you go. Thanks, everybody.